MPC decided by a majority of 5 members out of 6, and you guessed it right, to increase the policy repo rate by 50 basis points to 5.9% with immediate effect. Consequently, the standing deposit facility, that is SDF rate, stands adjusted to 5.65%, and the marginal standing facility, that is MSF, and bank rate to 6.15%. The MPC also decided by a majority of 5 out of 6 members to remain focused on withdrawal of accommodation to ensure that inflation remains within the target going forward while supporting growth. Real GDP growth for the current financial year 2022-23 is now projected at 7%, with second quarter at 6.3%, third quarter at 4.6%, and the fourth quarter at 4.6%, with risks broadly balanced. The growth in the first quarter of next financial year, that is 23-24, is projected at 7.2%. Global geopolitical developments are weighing heavily on the domestic inflation trajectory. Inflation inched up to 7% in August from 6.7% in July. Acute imported inflation pressures felt at the beginning of the financial year have eased but remain elevated across food and energy items. There are also upside risks to food prices. Cereal price pressures is spreading from wheat to rice due to likely lower Kharif paddy production. The lower sowing of Kharif pulses could also cause some pressures. The delayed withdrawal of monsoon and intense rain spells in various regions have already started to impact vegetable prices, especially tomatoes. These risks to food inflation could have an adverse impact on inflation expectations. The movement of the Indian rupee has, however, been orderly compared to most other countries. The Indian rupee has depreciated by 7.4% against the US dollar during the same period, that is from 1st April of this year to the date which I just mentioned, that is up to 28th September. So while the US dollar has appreciated by 14.5%, the Indian rupee has depreciated in a very orderly manner by 7.4%. The Reserve Bank intervenes in the market to curb excess volatility and anchor expectations. The overarching focus is on maintaining macroeconomic stability and market confidence. The aspect of adequacy of forex reserves is always kept in mind. The umbrella, as I had said earlier, continues to remain strong.